So, Mr. Shah, a 56-year-old businessman out of Illinois, owner of multiple IT companies in the Chicago area, on paper, legitimate, respectable, and the kind of guy that you see at networking events handing out business cards with embroidered text. Then you find out that this man submitted fake bank statements, forged altered signatures, and stole people's identities and poured over $55 million out of federally insured banks just like it was his personal ATM. 55 million. I need you to understand that this is not I cook the books with little money. This is supervillain origin story that is buy an island disappear money. This is the audacity that I genuinely respect, even though I should not. So let's get to it. Mr. Shah ran what you call an information technology business. Multiple companies based in Chicago area. Nothing flashy on the surface. The kind of operations that sound boring at dinner tables. Oh, what do you do? IT services? Okay, cool, cool, in a conversation. But behind that very unremarkable exterior, Mr. Shah had apparently decided that the known way of running a business, making money and paying for things, was simply not for him. Because what he was doing was going to federally insured banks, looking them dead in their eyes, and submitting documents that were, to put it lightly, completely made up. We're talking falsified bank statements with inflated deposits, inflated fabricated balance sheets overstating revenues, audited financial statements, and I want you to really say with this one with forged signatures. Forged signatures on audited financial documents. If you ever had to deal with auditors, and some of you have, you know they're not a fun crowd. They're meticulous, detail oriented, and specifically there to verify your numbers are real. Forging that signature is not a small move. That is looking the entire financial verification system in the face and going, yeah, I don't think so. And it worked for a while. So here's how the main scheme worked. Shah would approach federally insured financial institutions, banks essentially, and apply for commercial loans and lines of credit, substantial ones. We're talking about a scheme that netted over $55 million in total across multiple institutions. To support these applications, he submitted fake documents, inflated bank statements to make his company look more cash-rich than they actually were, overstated balance sheets to make revenues seem higher, forged audit reports to make everything look legit and verified. And once the money came in, he defaulted on at least one line of credit and one loan. He just stopped paying it back, which is the part that really gets him because at what point did he think this was going to end well? Like there's a version of this where you're a little slimy but at least strategic about it. You keep paying the minimum, you keep this place spending, you make it as hard as possible for anyone to notice, but defaulting, that's the equivalent of robbing a store and then waiting outside for the police. He also engaged in money laundering with the proceeds moving the fraud money through transactions to obscure where it came from. Now, if you thought that the whole story is, it's not. Because while this was going on, the global pandemic hit and Shah saw opportunity. Okay, so March 2020, the world shuts down. Congress passes the CARE Act and rolls out Paycheck Potential Program, or the PPP. The idea was simple and genuinely good intention, giving small business emergency loans so they can keep paying their employees during lockdowns. The government would back loans through SBA, and if you use the money for payroll, the loans get forgiven. A lifeline for rural businesses in genuine crisis. Shots made an application for $441,000. And look, compared to $55 million in bank fraud, that number might seem almost quaint. But that's your little that's your little side hustle. But the way he did it is what makes this one particularly ugly. He overstated the company's payroll expenses. Standard fraud move, straightforward enough. But then this is the part. He submitted fake IRS documents to the lender, documents that claim his company made bankroll payments to multiple individuals who never received those payments. And to make sure the fake payroll looked real, he used stolen identities, real people's names, real text identification numbers. People had no idea that that information was being used to fraudulently claim government emergency relief money during a pandemic. He then signed and submitted what was supposed to be IRS Forms 1041's quarterly payroll filings to the lender, When investigators compared those documents to what Shah's company had actually reported to IRS and to state tax authorities, the numbers were completely different, significantly lower, because the real payroll was a fraction of what he claimed. So to be clear about the latest here, fake IRS documents, forged payroll records, stolen identities, and fraudulent claims about money paid to people who received nothing during the pandemic. Using a program designed to protect people's livelihood.